Hi, friends. So today I just quickly want to bring to your attention. It's been a while. I went to the chat. So today I want to quickly do a breakdown for you on volatility 75. The market is not always ripe. There's a season, there's a time for the market to be set for trade. All right. So quickly, let me go through this. And as I'm going to, I believe that you will learn a few important points here. Yes. So this is volatility 75 on the daily time frame. Let's go to the monthly. Let's start from the monthly time frame. Then we come down to the daily time frame. So on the monthly time frame, I have a question for you. What do you see on the chart? What do you see on the chart? I'm actually recording from my phone, so um I pray you get it right. Okay. So I've gone to my chart. So my question is, what do you see on the chart? What do you see? What do you see? All right. Okay. So, I guess you've seen a few things. Now, let me go to my chart and also explain to you what I clearly see on the chart. All right. So, on the chart, we have an order block. We have a bullish order block, which stem all the way from this point to this side. And the question you ask is, why do you say the order block is from this to that? All right. Okay. So you would understand as we go along. So an order block simply is not just the last down push candle, but it's actually made up of a continuous candle at a particular low or high. If it is the same candles that has pushed that far. All right. So let me take this off my chart. So actually we have um, this candles as, but where did price retrace? How come price just came down and then retraced on the monthly time frame? I want you to have a fair view of whatsoever happens on the market. So let me just pull a fib and show you something very crucial that happened, that sometimes it may elude a lot of people. When you take an order block, sometimes there is always a reversal point, even on an order block. So when you pull the fib, you notice that the reversal actually took place on the 23.6 level. Right? It took place on the 23.6 level. So it tells you that this 23 point, this is the level that price was rejected. All right. So it wasn't rejected at the 50 level, it was rejected at the 23 point. Let me bring it to the last down close candle and show you further. On the last down close candle, you would also notice that if we are even considering only that candle, price was rejected close to the same 23 point, but it wasn't actually on that level. All right. Okay. So this last down push candles, these are the other blocks. These are the other blocks. These are the other blocks. All right. So, but mostly price would eat deeper into the last down push candle depending on the situation. Here we had a situation here, and the situation was that there was there were something we call lows, or we call them either equal high, equal lows, sorry, which is this. The equal lows doesn't necessarily mean that they are on the same level, but there are two lows. Okay, on the monthly time frame, these are two different lows, which means that below this there are liquidity, below this point, below this and this, there are liquidity here. So price must necessarily trade below it to take the liquidity. People sell, put their sell stops below it. That's, I mean, those who trade, the retail mindset is that it's a support level. So when the market is broken, the market must continue down. That is that's the retail mindset. So support is broken, you know. So let me pull it. The retail mindset says this level is a support level, is broken, so price must continue down. But no, rather liquidity rests below this level. So when the market rates it, it begins to trade against that level. So you notice price is now going above and going higher. That's taking all the sell stops here, triggered their trade, now trading against them. So now all those who sell stops are now in deep losses. All right, that's how the market algorithm trades. Now, so you have a fair idea that there are lows here and it has to be traded through. Now, as the price, so let me put my straight this line here well, so that I have a fair idea. So as we price has traded through this or below this level, my expectation is that it should find a point at which it can necessarily reverse. Okay, so as it rated this, what was the next necessary point? We had an order block here. So let's look for this order block. When you look at the mean threshold of this order block, somewhere here, somewhere in the middle here of this candle is where we necessarily expect price to reverse. And what did price do? When price got here, it actually reversed. Or sometimes we make room for the pips that will come after. But let's say the reversal point is, we usually consider the body. See, so the reversal point is actually on top of this last down push candle. All right, so this is where it bounced back. All right, so let me put another line here beneath it so that you know exactly the bouncing back point. Okay, now let's go down to the weekly time frame. So we are here on the weekly time frame, so you can see clearly the lows that were raided, and price had to trade down to a certain level. That's what I'm saying, that price had to, if you follow my mentor Michael Henderson, you will notice that we actually have to have some PD arrays and price algorithm. It has to look for a liquidity point where it can fully take liquidity out of the market and begin to trade against it. So here there was something hidden here, and which is called a fair value gap. It's a tiny one that, I mean, most people wouldn't have noticed, but there was a small fair value gap up here, you know, that price actually traded and just dipped itself into this fair value gap, and then before it began to rise up. So this fair value gap has been there many years back. All right, that was somewhere. Let me try and find a bit. That's somewhere in 2020, October 18th. Yeah, like October 18, 2020. This is where this fair value gap was created. These are weekly candles. So within that week, this was a gap that was created. You know, so there were people only bought, and there wasn't any form of selling against the market. So the market had to automatically come down to that point and do justice to that. If you go below that, you realize that there's nothing really down here, no fair value gap. Price has been traded into another block, and I mean, everything here has been accomplished below this point. So price necessarily, after I had taken down the lows, the necessary point which was closer, was this particular point, that there's going to be a read on the um there's going to be a read on that fair value gap here. All right, so price traded into that, and then it began to rise up. So if you were necessarily setting your trade, I remember I had a trade somewhere. I entered a trade somewhere here because there was another block, you know. I think I entered the trade somewhere here and it failed. Then later I realized that no, price had actually traded this side and there was a small fair value gap. So I waited for the gap to be filled, and I wasn't ready to enter the market at that time until now that I entered, So this was a necessary point that anybody could have just entered the market to just hold on to the trade. By now, a lot of dollars would have been in your account. So we move on. So that is the weekly analysis here. So now the price has raided the lows, equal lows here. These two lows here, price has raided it and it is trading above it now. So price must take necessary action and run up with all the orders that they have closed here, run up with it and just trade against them. Now they are selling, so they have to get buyers. So the buyers are buying it at a more cheaper price and they are making profit from your higher cost of sales. So that's basically how we are looking at this. And then let's look at the next thing. So now price has traded down to this level, and what next? It has raided. So how do you get an entry around this area where price is currently trading? Now let's go down to the daily time frame and see if we can get a trade set up somewhere here. So immediately when I saw this kind of move, this downward movement, all that I was waiting for was to wait for the market to shift, and lo and behold, the market shifted to a particular direction. So the market shifted upwards. There was a break in market structure. Let me just quickly show you that there was a break in structure from this point. There was a structure break from here. So when the structure broke from this point, I knew to myself that, let me quickly change the color, please. So okay, this should be okay. All right. Okay, this should be fine for me. Let me change the color to, I think red is okay. Yeah, I think red is okay. Oh, sorry. Sorry. Let me quickly come back to my screen. I told you I was recording on my phone, so sometimes it makes recording slightly. There's my automatic rotates. Okay. So we are back. We are back on the screen. All right. So there was a break in structure, as I was trying to show you. There was a break in structure from this point, and after the break in structure, necessarily what I'm expecting is, okay, I'm good to wait for a trade to set or to cook. And how do I wait? I wait for price to retrace necessarily into, so the structure could have been here. Okay, because this is a normal swing high and then another swing low here, swing high, swing low. So it broke the structure. First of all, the structure is here. If this structure alone was broken, it was fair enough. Okay, thoughtless to come up to break this other structure here. So necessarily you wait for a pullback into an appropriate zone where you can enter trade. And where is my pullback? Where am I expecting price to come back into? There was clearly a fair value gap here in this zone, and I expected price to trade into this fair value gap. I expected it to trade into this fair value gap below this. I expected price to quickly come back into this zone and clear this gap here. There was another one up here, but necessarily I knew that price would definitely drop down into the lower fair value gap. And then when price dropped into the fair value gap, was it enough for me to enter trade here? No, it wasn't. Because why? Because I knew that there could be another fair value gap here, down here. But why didn't I wait and say, okay, let me wait for price to get here? My reason is there is an order block that price traded into, that necessarily price as has traded into an order block. My expectation is that price is going to go back up. Now this continuous bullish candles from bearish candles from here all the way down here is the order block. Oh, Anthony, why are you saying that the other blocks are not the last down push candle, rather continuous? Hey, go to my mentor and go and learn what other blocks are. Everyone is online teaching his own thing. The inventor and the inventor of other blocks, the one who says that this is what the name called other blocks, go to my mentor, Michael Hedison, ICT. He will give you the nooks and the hook and the crooks of every single detail of his style of trading. All right. So this was an order block. And when price actually had filled the fair value gap, I necessarily expected it to quickly go back up without having to for it to even go back down. Now beyond this, let me also give you um further filter that made me convinced to go in. Okay, so I pulled my fib. Sometime I pull my fib all the time. I pull my fib from the high to the reversal point. You realize that the reversal point is on the 50 level, and the 50 level had already entered into the other block. So quickly I I knew, and it also the 50 level was also the same level that had breached the fair value gap, and I was like, no, this is enough sign for me to enter the trade. So quickly I entered my trade, you know. And what is my expectation? I'm expecting price to go up. This where I've placed the take profit level. You know, can you see why I place it there? There are some levels there that price must necessarily go and clear. Can you see the equal highs above there? Oh, it's so clear and so nice. There are some equal highs there. Price must go and clear those equal highs. People have set this, they've seen this level as how do we call it, retail mindset. They see this level as a resistance level, so they put their buy when price breaks that level. But um sometimes it may go for their favor if price is supposed to go up and go and take down the take profit two level. But hey, we are not looking at that. So basically this is how I filtered my trade and entered my trade on volatility 75. Let's see how it plays and let's see how it goes. Someone is asking, why, so what's your stop loss? How are you going to exit the trade if it doesn't go my way? Oh, it doesn't go my way, it doesn't go my way. I have an exit point. So guys, I wish you all the best in your trading, and do have a fruitful trade. If you have any question regarding whatever I have just said here, you can post in the comment section. I'll get to you. And Do have a fruitful trading